Hello and welcome to a special edition of CFO Focus Live. I'm Aditi Roy. For decades, the path to the CFO seat was a long, slow climb. The average age still hovers around 53. Among the 120,000 CFOs in U.S. companies making at least $20 million in revenue, fewer than 10% are below 40. Still, we are seeing a new generation of leaders who are not waiting their turn. They are rewriting the playbook, reaching the C-suite in their 30s and leading through hyper-growth, IPOs, and massive digital transformations. Today, we're joined by four leaders who really embody this shift, and we're going to ask them, how did you get here so quickly? We have Hiral Patel, Chief Accounting Officer at Pep Boys, Peter Preston, CFO of Paloma Acquisition Group, Dan Gabel, CFO of OSS, and the man who helps find this talent, Mike Chiv, Managing Partner at Proven Recruiting. Let's dive right on in. The question for our finance leaders to set the stage, give us a quick 60-second snapshot of your company. So we're talking geography, scale, top and bottom lines, and funding. Hiral, let's start with you.
Thanks, Aditi. My name is Hiral Patel. I'm the Chief Accounting Officer for Pep Boys. We currently are a service business. We have around 800 locations, predominantly in North America and in Puerto Rico. So we are backed by a PE firm that is also publicly traded. So I get to play in the SEC world and also in the private world at the same time. So it's quite interesting navigating both of those areas. We've been around for almost over 100 years. So yeah.
And your headquarters are where?
We're headquartered right in Bala Cynwyd, which is right outside of Philadelphia.
I know it well. Thank you so much, Hiral. Peter, let's go to you at Paloma. Tell us a little bit and give us a snapshot of your company.
Sure. Thanks, Aditi. Paloma Acquisition Corp is a SPAC. We're focused on precious metals, specifically gold, silver, and copper. We're literally trying to buy a gold mine. And we are global, very global. We're focused on the US, Canada, Australia, and New Zealand. We're a public company traded on the NASDAQ. We raised about $150 million in an IPO in February and a successful outcome at that. We're focused on our de-SPAC transaction today in the scale of $500 million to $1.5 billion. And I am the only US-based officer.
And where are you headquartered?
I'm in Laguna Beach, California, but the company is headquartered in the Cayman Islands, and we're in New York as a U.S. presence. Great. Thank you so much. Dan, let's go over to you at OSS.
Yeah, thanks, Aditi. So OSS is an edge computing company. So what that means is we develop deployable compute systems that enable high-end processing, sensor fusion, autonomy, AI, ML, on platforms. So not in the data center, but think about on an airplane, on a truck, on a combat vehicle, on a submarine. We're based in San Diego County. We have about 60 employees. We'll do about 40 million of revenue this year, growing rapidly. We're profitable at the EBITDA level, and we trade on the NASDAQ, ticker OSS. Our market cap right now is in the 350 to 400 million range.
Thanks, Dan. Mike, you see snapshots of hundreds of companies. In 2026, what is the number one thing a board is looking for when they hire one of these leaders?
Yeah, so here's how I kind of put it. The biggest risk on a board's balance sheet isn't capital. It's the wrong person in the wrong seat. So what I'm seeing is boards aren't just hiring someone to protect the downside anymore. They want someone who can help build the upside. So can you drive revenue conversations? Can you walk into a board meeting and tell a story and hold up under that pressure? The technical skills, that's kind of the entry point. But what boards are really buying in is the conviction and the commercial instinct.
So you have to get in through the gate through those technical skills, but really what sets you apart is the more strategic skills.
Yes, correct.
All right. Well, we're going to come back to you to mine all of your wisdom. But first, our research shows a public versus private divide. Public CFOs often rise internally, while private and startup CFOs move quickly through banking or consulting. Dan, you have spanned both Fortune 100 at Raytheon and now as NASDAQ-listed tech lead at 38 years old. How did those early high-impact moments like M&A prepare you to take the seat earlier than the traditional accounting track?
Yeah, I think a good piece of advice that I got from Mentor early was to run towards the fire. And I think throughout my career, I've always tried to find those high stakes, challenging roles, things that are important, get visibility. So early in my career, I kind of came up through FP&A. Often those roles meant being the finance analyst on what we'd call a red program, a program that was maybe losing money, needed a turnaround, that was strategically important for the business. I think as my career progressed, that often meant supporting M&A activities, to your point. Those are often and pretty much always high stakes for a company by their nature. And I think that what those experiences did for me is they pressure tested me. They taught me how to execute under pressure, how to stay focused amid stress and sometimes chaos, how to see the bigger picture and really drive priorities. So I don't think it's necessarily whether you're on the accounting track or the FP&A track, but I do think it's really valuable, especially early in your career, to just seek out those most challenging roles that you can find, because you just learn a lot from those experiences, and especially soft skills about how to execute under pressure.
Was there one breakthrough moment, maybe one of those M&A deals, in which you thought you got over it, met the challenge, and thought, okay, you know what? I see a path for greater things? Or was it just a combination of all of those experiences together that kind of led you to where you are right now?
Yeah, there's a few experiences that kind of stand out for me. One was when I was at Raytheon, kind of big prime, great company. But we bought a smaller company that did satellite electronics, and I had the opportunity to be part of that acquisition process, from the due diligence to closing the acquisition. And then when we closed it, I went over as CFO of the subsidiary. And it was a great experience for me because as CFO of a subsidiary within a larger company like Raytheon, I got a feel for what it's like to kind of be in that leadership role of an organization. And I really liked it. And I think that kind of set my career to then move outside of Raytheon towards some of these smaller companies where I felt like I could really be impactful.
Great. Peter, you're in the public markets at 38 years of age with a SPAC. Now, you spent time in corporate development at Ingram Micro. How much did having a broad rather than deep accounting background help you secure a CFO position so young?
I think it's been absolutely instrumental from my perspective. I'm not a CPA like a lot of other CFOs. In fact, the role that I initially was in conversations with for Paloma was a COO role. And our CFO ended up dropping out, and I stepped up and said, I can do that. I know enough. My accounting is strong, but at the end of the day, my exposure to M&A, corporate transaction structuring, controls, all these things from an M&A standpoint help to create a really strong, broad, structure and understanding of what is going to be important in a role like this. And frankly, the use and development of AI these days has really changed accounting. And I think, as a CFO who's not a CPA, I can lean on a lot more technology and a lot more advisors than in the past.
And we are going to come back to that AI thread because it is so important right now and shaping your industry. But first, Hiro, you have led massive SAP implementations and worked with PE-backed firms. Do you feel that the finance transformation wave, AI, as we mentioned, and automation, is what's really opening the door for younger tech-native leaders like yourself?
Absolutely it is, because we've been in that unique position where when we started, you kind of had to do a lot of stuff manually, right? So you understand some of the mundane and non-mundane tasks that we've kind of done, where AI is now automating it. So for us, it's really important to understand what tasks do make sense to be AI driven versus which don't. And then it has also helped us understand how do you read the outcomes of that AI model, just not, put some data in there and expect the AI model to do everything for you. So to me, leading some of the SAP transformation, the basic questions was, well, what are we trying to solve for versus just saying, let's use AI? Because I think it's always a default of let's use AI. But like, for instance, at IKEA, the intent was it should be a complete seamless three-way match of, purchase order to invoices to receiving, right? But when you take a step back, it sounds very easy on paper, but when in operations, it's quite difficult. So it's really understanding what problem am I trying to solve versus sometimes it feels like problems are created so AI could solve it. So we could say we use AI. So to me, it's more, what is my true problem? what will it help me make a faster or better decision? And how can I produce that data more efficiently for the leaders?
You bring up a really interesting point, which is you are all at this generation in which you have done the nitty gritty manually, but you're this bridge being more digitally native to this new era. So you understand both, and really to use AI effectively and at that high level, you, like you mentioned, you need to know how to problem solve and what happens when you do get those challenges, or it doesn't quite give you the output that you need. So you have to just keep going at it. And you need that deep understanding of those details. So I would ask for all of you, how much of an advantage is it for just your overall careers that you sit at this really incredible nexus point, knowing kind of the old tech way of doing things, but also having a unique perspective into this next wave, particularly as we enter the agentic AI phase? Dan, we'll start with you.
Yeah, I think it is an advantage. I think that especially at a smaller company where we're working with lean teams, we're really trying to grow the company, trying to do so profitably. There's a lot of pressure to do more with less, and so I think that one of the strengths that I'm able to bring to the seat, I think, is that I'm comfortable getting in the weeds and kind of doing the heavy lifting of the work, but I'm also comfortable, being able to step back and do the CFO strategic role. So I think that experience is valuable, especially in a company that's growing fast.
Peter, your perspective on AI. A lot of people talk about how it's going to replace all these jobs, but again, the fact that you have all this experience in the old way of doing things, but also a great perspective in this new wave and the agentic era, how does that put you in a good position?
Yeah, look, I don't know if AI is going to replace jobs or take jobs away necessarily, but it does create an opportunity for human on the loop processing, as we call it in the tech forward ways, right? Which is human supervision of AI. And I think that for folks that have that fundamental understanding, like some of the folks on this call, it is such a strong advantage to have that understanding and that training underlying kind of our experience. That way we can guide the AI to help us be more efficient. But frankly, I don't know how these younger generations and new entrants into the workforce are going to fare. It's going to be quite tough. There's just a lot of basic and fundamental work that AI could do much, much more efficiently at that very ground level of any corporate work.
And Hiro, you got this started on this conversation. I would ask, we talk about replacing jobs. Peter mentioned that. Is it possible that your jobs may just be reformulated? Does this free you up to do higher level work?
I think it absolutely does, because again, it just provides more quality data on a timely fashion so that you can get to decisions faster versus, in previous times where it could have taken you a week to do an analysis, it can now take you a day or less. But again, you can continuously switch the different levers based on who you're having that discussion with. If you have a discussion with the CFO and if he or she's like, hey, what about this? What about that? You can quickly pivot to those models versus before you take notes and be like, okay, let me go back and rerun it. So to me, it just provides more timeliness versus, a displacement of roles or where things are going. And, to just answer in terms of advantage, I think the advantage that we have right now is mindset, because we've done it manually. So we understand what the outcome should look like. And with the new generation coming into the workforce, they're unfortunately at the disadvantage because the computers are doing a lot of their work. So it's like basic math, right? Like where kids no longer need to know this complicated math because you can use Excel or you could use AI. But when you know the basics, you can kind of solve for a lot.
Absolutely. And you, I think, answer the first part of my next question. Before we get to Mike, I'm going to do another quick round because I want to stay on you, Hiro. As someone who is under 40, what unique perspective do you bring to your position? I think you've already answered that for us. The second part of it is, what is the biggest liability that comes with being under 40 and your position? So we'll start with you.
I think people judge experience based on number of years versus the quality of experience, right? Just because I might have been in the workforce for 15 to 18 years versus the team I'm leading or the folks that are developing the projects could be in for, 25, 30. So you continuously have to prove that, hey, I know what I'm talking about because the quality of experience I've gotten is significant. So it's in a way, it's a liability that you continuously have to prove that it's the quality that matters, not the quantity of years that it's on my resume.
And Peter, I would imagine, though, that in having to go against kind of that stereotype that many people might have, that actually helps you build up skills. Can you talk a little bit about the liability, but also the biggest asset of your age and in your position?
Sure. I agree with what Harold said. I mean, I think it's reputation risk and credibility risk, and whether that's among your employees and your team or the investor community who's putting money into the vehicles that you're managing, there is a liability there. But on the asset side of it, I think, Aditi, that some of the most advantageous experiences I've had is not waiting too long in any role. I've been told a couple times that I've moved sooner than an executive team would have liked me to, but nonetheless, opportunities come up, and I think it's important to make sure you're constantly stretching yourself, pushing that envelope, both for yourself as a person to learn and to develop in your career, but also for the companies that you work for. You want to make sure that they're getting everything out of you that they can. That's your responsibility to the firms that you work for. I think when at some point you're just doing your 10 things every day, you're just not giving all of yourself to the firms that you work for.
Mm-hmm. That fresh perspective. Thank you so much, Peter. Dan, what is the best part of having this unique perspective of being under 40, and what's the biggest liability?
Yeah, I mean, I think Hiral and Peter kind of hit it on the head. I think that the biggest liability is as Hiral was saying, every time I go into a new role or a new situation, there's this little devil on my shoulder that's whispering, is the team going to respect you? Would you have a little more gravitas in the boardroom with some more gray hairs? So I think that is a challenge, but I think the asset is those doubts kind of propel me forward. They really push me to prove my worth and prove my abilities, to be the most prepared in the room, to have done the most research, to be willing to work the hardest and really take ownership and put all of myself into the work that I'm doing. So I think that liability in many ways becomes the biggest asset as well.
Yeah, that's a great point, because you love putting yourself in that underdog role, right? Always being hungry for it, always fighting for it, rather than being the veteran who's just kind of resting on your laurels. It's a great perspective. Mike, let's go to you. You counsel rising controllers on their path to the CFO seat. When a candidate is under 40, what's the biggest hurdle or skepticism they face from a board? How do you coach them to overcome this?
Yeah, that's a great question. So just to start for the hurdle. So honestly, I think it comes down to one question. It's, have you been tested, right? Boards want to know you've actually been through something, not just riding the wave up, but navigating some real adversity. And so when it really depends on who you're reporting to. For a public company, it's shareholder value. You're PE backed. Can you hit EBITDA targets and run a tight ship? VC, can you manage burn and be a real partner through fundraising? So the skepticism definitely looks different depending upon where you are. But here's what a lot of people miss. I feel like boards aren't just reading your resume. They're watching how you show up. A lot of under 40 candidates lose the room because it's not that they aren't qualified, but it's because they don't have that executive presence that isn't there yet. And then to your second question, how do you coach people to overcome it? I would say start having those conversations now. Go to your CEO and CFO and raise your hand for more. Board prep, pricing strategy, sales discussions. When you're in those meetings, don't just sit there, own something. Lead a section, be a voice in the room, beyond just accounting into FP&A or treasury or ops, wherever you can get more exposure. And then also find a sponsor, not just a mentor. I had a candidate once that leveraged their Big Four audit partner, who got connected to a board member at a company they were interviewing with. That partner not only advocated for him, they got an off-the-record conversation with that board member directly. Because of that one relationship, they actually got in front of the decision maker, where most candidates wouldn't even get near that decision maker. So I think that's definitely what a real sponsor looks like as well.
Great wisdom there from you, Mike. The research mentions the trade-off of rising too fast, specifically a gap in experience in capital markets or crisis management. Dan or Peter, have you ever felt that imposter syndrome or a moment where you wished you had another 10 years of seasoning before a major deal?
Dan?
Yeah, I'll start. Yeah, I think every time I'm going, like I mentioned, every time I'm going into a new situation or a new deal, there's a little piece of me that feels like an imposter, that wonders if I'm going to get respected and so forth. But like I said, I think there's a lot of resources out there to prepare, especially in terms of mentors and talking to other people who've been through this before. And so I think leaning on that experience and being as prepared as I can be and going in there. I think those doubts, like I said, they kind of propel me forward.
Yeah,
so.
Exactly. Peter, does that young and hungry kind of ethos help propel you forward as well? How have you felt that imposter syndrome sometimes in those high stakes situations? And what do you do to overcome that?
I'm going to be a little contrarian here, and I hope it doesn't sound as ego or arrogance, but my answer is actually no. I can't say I felt too much of imposter syndrome, and I think it has to do with just the way that my career has evolved. When I worked for larger companies, I had very good mentors who really took me under their wings and taught me and prepped me properly and had good training and all of that. And then when I came into kind of more tech, high growth, more innovative spaces, then I became kind of the grown up in the room coming from a bigger company background. So people looked to me because I had more expertise on a lot of matters than others did. So I can't say I ever felt like true imposter syndrome, but definitely the hunger is always there to prove yourself and earn that credibility with everybody in the room. There's no doubt. They put their trust in you. You got to deliver on it.
Harold, I want to ask you about the CFO as storyteller. Are you spending more time on the numbers or on the narrative of where the business is going? And do you think that your age and, again, being a bit more digitally native helps you with those skills?
I think for me, I'm in a really unique situation because I'm still a chief accounting officer. So I'm still responsible for what happened on the P&L and on the balance sheet, but then I'm also responsible to narrate, like, what does it mean, right? So the question that, my CFO will always ask me, so what? Like, what does this mean, right? But when she's asking, she's not asking, what does it mean in the past? It's more, what does it mean in the future? So for me, it's using that skill set and to be able to really go backwards and forwards to help explain what does this trend mean in terms of looking in the future, right? Is this a one-off trend or is this a reoccurring trend? Have we budgeted for it? Is it in our forecast, or is there now a risk or an opportunity? So to me, I do sit in a very unique position because I am now getting into the so what discussions versus just kind of reporting on, hey, here's what the numbers came in at.
Exactly. Putting some context behind it. So what does that mean?
Right. And even just kind of taking a step further, that it's not always when somebody's asking a question, but also kind of taking this data and going back to operations, whether it's supply chain or legal, and saying, hey, like, what is happening that is driving X? So it's not always waiting for somebody to come ask you that question, but making yourself relevant to the other business stakeholders.
Interesting. And those questions, it sounds like, are now originating in your head rather than being asked, right? You're asking those questions and being more active about it. And it sounds like it's also allowing you to be a bit more multidisciplinary.
Correct. It does, because again, to kind of broaden my skill set, because, when I took on this role at Pep Boys, I had told the CEO at that time, hey, if you just need somebody to come oversee closing the books, I'm not the person. Like, that's not what I want to do. I want to be able to add value with the skill set I have to operations. Like, I can do closing the books, I can manage that. That's 20% of my time, but that cannot be 100% of my time just because the title reads that.
Thank you. Well, Mike, are you seeing a shift in the CFO archetype? Is the controller turned CFO becoming extinct in favor of the strategic partner?
Yeah, so short answer, no, but the job has definitely changed. The path matters less than what you bring to the table. So 3 things are now like table stakes: technology fluency, AI enablement, and data analytics. If you're not involved in those conversations, it definitely shows up. And beyond that, can you take a complex financial story and make it land with the board, an investor, or a sales team? Because the CFO who can only talk to other accounts is like more of a real liability today. So, the best example I've seen is I had a controller who became the go-to person for a PE firm. Every question, every meeting, they were the one kind of answering. And then the PE firm let the CFO go. And then this person stepped up, took on the full role, and actually led a successful sale to another PE sponsor. So more credibility from that one exposure and experience than probably a decade of traditional career progression. So strategic partner is the role, but start building that muscle now, long before you're sitting across the table asking for the job.
All right. On that note, Mike, we are going to take a little break and actually go to a recorded question from the audience. Let's listen in.
I'm Lars Ratcha, Senior Vice President and partner with Lockton Insurance Brokers. I'm based in San Diego, but I office both out of our La Jolla office as well as Irvine. My geographic focus really is in the Southern California area. So we do all things insurance, so it'd be property and casualty, employee benefits. So my question for the panel really surrounds being a younger C-suite. You are now wearing a lot of hats. And my question is, how does insurance or risk management play to that? Is that something that you are well versed in, coming from maybe more of a finance background? Or is that something that is newer to you, right? Really, insurance is balance sheet protection, it's risk finance, and understanding how that plays into your overall risk strategy. So being a newer C-suite, is that something that comes up within your organization often? Is that new to you, or how do you handle that?
Right. Risk management is the question. Is there someone who wants to answer first? Hiro, let's go to you.
So I've definitely gotten a lot more exposure to enterprise risk management here in my current role. And again, I'm very fortunate that the CFO that I'm under right now, she's led an ERM at her previous organization. So she's really helping me see, what do you look for when you're running these programs, or what is the typical risk, or how do you manage this risk profile? So to me, it's been really beneficial to kind of understand how you run that without really taking full ownership of it.
Thank you. Dan, what about you?
Yeah, absolutely. Enterprise risk management is a big focus here, as I think it is for any company. I've had opportunity to be a part of that in the past as well, so it wasn't completely new. But I would say to Lars's question, the insurance side was something new for me coming into this role. Kind of working with the brokers, understanding the different options for commercial insurance, D&O. We work with Lockton, Lars's company, and our brokers have been great in kind of leading me through that process as we've gone through it.
All right, Peter, you're up.
Yeah, I think risk management is of critical importance, and it always has been in the CFO role. Kind of a balance between risk management and managing growth moving forward, and managing your return on your equity for your shareholders. But from the insurance standpoint, it's definitely a critical piece to any corporate environment, especially when you're talking now about the cyber threats that we face. You got to have cyber insurance coverage as well. In addition to your traditional, D&O, and all of the good stuff.
All right. Well, we are going to end on a quick lightning round. So in one sentence or less, tell us the answers to these questions. Peter, we'll start back up with you. What is the best piece of advice a mentor has given you?
Good question. I would say library days. I have a great mentor who, one of the most important things he taught me is once a month, or maybe if you can't do it once a month and once every 2 months, go to the library. Just you and a notepad and a piece of paper and a pen and a lavender latte, and just sit there for 3 or 4 hours or a day and just sit and reconcile all the thoughts that are in your head. And that might be corporate and company oriented stuff, whether it's organizational structure or you just the amount of work you got to do and figure out how to prioritize it. Or it might be personal, like, hey, how do I manage health and family with this balance of company life and responsibilities? Or maybe it's something else, but if you sit there and you really just reflect on what's going on without a phone, without a computer in front of you, it opens up a whole bunch of different solutions, I find, to different problems in your life or different circumstances that you might not have otherwise seen.
All right. Definitely more than one sentence that I asked for, but thank you for that. I love the idea of the library days without the tech, no problem in tech and, kind of being low tech, but that lavender latte gives away your generation. So, Dan, I come to you. What is the best piece of advice you've received from a mentor?
I think to be willing to take some risks in your career. I spent the first 12 years of my career with Raytheon, big defense prime, great company. One of the toughest career decisions that I had to make was when I left Raytheon for another opportunity. I really struggled with that. And I had a mentor that kind of encouraged me to take that risk, to go out of my comfort zone. And I think that's great advice. I think you always have to be willing to take some risks.
Great. Hero, best advice.
This kind of sounds cliche, but it's, you miss 100% of the shots you don't take, right? So, ever since I transitioned from public accounting into industry, for me, it was okay to be like, okay, what do I want to do next, right? So when I did transition, I'm like, I want to make it to CFO. Before, I'm like, oh, I don't know if I could say that I'm just an assistant controller. I'm shooting too high. But now, you kind of get that courage that you do have to put it out there if that's what you want to do. So again, it's just taking the shots versus saying, oh, I don't think I could do it.
Love that. Mike, you are usually the advice giver, but tell us if you've received any amazing advice.
Yeah, I'll keep it short. I like this quote that I heard from my mentor. You don't rise to the level of your goals. You fall to the level of your systems.
Oh, wonderful. Again, really quickly, one sentence. What's next for you professionally? Peter.
CEO role in 5 years.
I'm glad. I usually ask, do you want to be CEO? So I'm glad that you went there. Dan, what about you?
I think to continue to build and grow OSS, especially through, we're going into M&A in 2026. We're looking for some acquisition targets. So I'm excited to be a part of that.
Very, very well. And Hero, what about you?
CFO, hopefully before 40, but we'll see.
All right. And Mike, what's next for you professionally?
Hopefully buying into the ownership group, being a longer term part of Proven.
Awesome. What may surprise people about you? That's what we're going to end on. Mike, we'll start with you.
This will be pretty quick, but honestly, it's kind of a miracle I'm here. Both my parents escaped the Khmer Rouge in Cambodia in the 70s, and they're both widows. So they're in their early 20s because of the war. And so eventually they came and met in the US through mutual friends. And then me and my brother were born. So the story kind of lives with me every single day. And that's why I do the work that I do. It matters to me.
Wow, that is powerful. Thank you, Mike, for sharing that. Hero.
I think when people first work with me, they think I'm extremely intense. So when I'm work mode, I'm intense. But once work mode is done, it's like, who is this person? Like, it's like, because I will banter for life, and I will know everything about the individual's life, their family life, what's going on or what their favorite spots are. So to me, I think they find it really surprising.
Great. Thank you, Hero. And Dan, what may surprise people about you?
So my husband and I have 2 adopted children. We adopted through the foster care system. That's actually not the surprising fact. The surprising fact is that during our foster to adopt journey, for a period of a few months, we actually had 5 children living in our home, an 8-year-old, 2 4-year-olds, and 2 2-year-olds. And I survived that. So I think the CFO stuff is a walk in the park.
Absolutely. And might I say that you look very well rested for having 5 children under the age of 8. Exactly. Thank you for sharing that. Peter, what may surprise people about you?
I can't beat that, but I'm a home baker and I have a signature watermelon pie that I make. That's about it.
Too bad we can't sample. Well, thank you so much to our panelists for this wonderful discussion, and we really appreciate your time. And a reminder to please visit www.cfofocus.org and register for our upcoming CFO Focus in-person gatherings in Denver on June 17th, Seattle on September 22nd, Las Vegas on September 23rd, and San Diego on October 20th. Stay tuned to www.cfofocus.org to find out when CFO Focus is coming to your city. Thanks for joining us. We'll see